Something big is unfolding in the crypto market right now, and most traders aren't ready for it. Inflation data from the US, potential tariff changes, and global liquidity shifts are setting the stage for what could be a defining moment for Bitcoin. The charts are tightening, volatility is sleeping, and when markets get this quiet, history tells us something major is about to happen. In today's video, we'll break down what smart investors are watching, why patience could soon pay off, and how this setup might reshape the next phase of the bull run. Stay focused, because sometimes the calm before the storm is where opportunity quietly appears. You know, when I look at Bitcoin right now, it reminds me of that quiet tension before a big wave hits. We're sitting inside this massive triangle, a zone where buyers and sellers are testing each other's patience. No one knows which side will break first, but one thing's clear. When it does, the move could be powerful. If Bitcoin breaks above that 113K to 116K range, we could be looking at a brand new chapter. But if it gets rejected, a short-term pullback below 100K wouldn't be surprising. I've seen this setup many times before. It's where emotion meets opportunity. The real question is, are you preparing calmly or reacting to every headline? Right now, the big players, institutions, hedge funds, and long-term investors are sitting on the sidelines. ETF inflows for both Bitcoin and Ethereum are unusually quiet, and that silence says a lot. It's not fear, it's patience. They're waiting for clarity, maybe a confirmed rate cut, maybe a stronger signal from the broader economy. I've watched this pattern for years. When uncertainty peaks, smart money doesn't chase moves, it waits for confirmation. And when that confirmation comes, it doesn't whisper, it roars. So if things feel slow right now, remember, the stillness often comes right before the surge. The key is to stay ready, not restless. The US inflation report is the heartbeat of this week's market story. Every trader, from Wall Street to small retail investors, is watching those CPI numbers closely. If inflation cools faster than expected, it gives the Federal Reserve room to consider cutting rates, and that could release a wave of new liquidity into the system. When money becomes cheaper, risk assets like crypto and tech often breathe again. But if inflation stays sticky, the Fed may hold its ground longer, keeping pressure on markets. I've seen it many times. One report can shift sentiment overnight. The goal isn't to predict the number, it's to understand what the reaction could mean for the months ahead. Ethereum is showing the same kind of quiet pressure we've seen in Bitcoin, a tightening range where every move feels like it could tip the balance. As long as ETH holds its first stop support, the door to a move toward $5,000 stays open. But if that level breaks, we could see a longer period of sideways action stretching into early 2026. I've watched markets behave like this before. It's less about prediction, more about positioning. The strongest investors use this kind of calm to plan, not panic. Think of it as the market catching its breath before deciding its next direction. Patience here isn't just a virtue, it's a strategy. The next big move on the global chessboard could come from the US-China trade talks. Investors worldwide are watching closely as new tariff decisions are expected around November 1st. If higher tariffs go into effect, they could quietly push prices higher, adding inflationary pressure and strengthening the US dollar. That often makes risk assets like crypto or tech stocks take a brief pause. But diplomacy can flip the narrative fast. One positive headline can restore confidence overnight. I've seen entire markets shift on a single trade announcement. This isn't about fear, it's about awareness. Staying informed and adaptable is how investors turn global uncertainty into long-term opportunity. In moments like this, when the market feels slow, quiet, or even boring, that's where real wealth is quietly built. Seasoned investors understand that consistency beats intensity. Instead of chasing every move, they focus on steady accumulation, using simple strategies like dollar-cost averaging and automated systems that remove emotion from the process. I've seen people transform their results just by staying disciplined when everyone else lost patience. It's not about timing the perfect trade. It's about showing up, week after week, with a clear plan. So if the charts seem calm right now, take it as a gift, because in financial markets, patience isn't waiting, it's working. In 2025, building reliable income streams isn't about guessing what happens next. It's about creating systems that work for you, even when you're not watching the charts. Data-driven investors use tools like AI analytics, algorithmic journaling, and structured trading routines to stay consistent and objective. I've coached people who stopped reacting to every market move and instead built habits that compound quietly over time. That's where real freedom starts, when your system makes the small, smart decisions for you. Remember, prediction fades, but process endures. The goal isn't to outsmart the market, it's to outlast it through discipline, automation, and continuous learning. Market consolidations are like mental games. They test patience more than skill. The market loves to trick traders, showing a breakout one day only to reverse the next. I've seen it countless times. Emotion takes over, people chase green candles, and end up giving profits back. The smarter move isn't reacting, it's observing. True professionals stay calm, manage risk, and move with liquidity, not noise. Think of it like surfing. You don't fight every wave, you wait for the right one. So if things feel uncertain right now, that's normal. This is where discipline separates long-term winners from short-term speculators. At the end of the day, this market isn't about guessing the next big move. It's about being ready when it comes. The investors who stay disciplined, automate their strategies, and follow data instead of emotion are the ones who thrive when momentum returns. Remember, real growth happens quietly, through preparation and patience, not hype or luck. Keep learning, stay consistent, and build systems that work for you long-term. That's how financial independence begins, one smart decision at a time. If you found value in today's insights, make sure to like the video, subscribe, and stay tuned for more strategies on building sustainable, automated income in the modern economy.